Live from Bloomberg's World Headquarters in New York, I'm Sonali Basak.
And I'm Tim Stanovic. Welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
U.S. ETFs investing directly in Bitcoin and Ether are enjoying unprecedented demand, with funds each posting record monthly net inflows.
Those Bitcoin ETFs now hold more than 1 million tokens, or about 5% of what currently exists. We get the latest on where we stand with potentially even more crypto fund offerings.
And we're going to speak with the Senior Vice President of Blockchain, Cryptocurrency, and Digital Currencies for PayPal, as the company integrates its stablecoin into its payment systems.
All that and more coming up over the next half hour on Bloomberg Crypto. First, though, a snapshot of the market. Bitcoin holding around $95,000 today. It did come within just a few $100s, hitting $100,000, though that was about a week and a half ago, back on November 22nd. Since then, it's hovered above $90,000. Ether today, though, down about 1.6%, up in November by nearly 50%. And then Dogecoin down 4% today. Can't believe we're talking about Dogecoin, but listen to this, up more than 200% in November. Let's talk XRP. Ripple's XRP also surging lately. It topped a market cap of $154 billion to make it the third largest crypto. That move higher over the past month has been pretty astonishing. Look at this year-to-date chart, up more than 300%, but a lot of that happened in November. It's up a whopping 180% over the last month, up 32% on Monday to hit $2.87. A lot of this based on momentum from Trump's win. Even against that backdrop, though, the rally is pretty striking. The market value surpassing the other cryptos, including Tether, Solana, USDT, of course, being Tethers. That's according to the stablecoin, or according to CoinGecko. Excuse me, Sonali?
Yeah, if you take a look here, too, I'm not taking a look at the spot prices. I'm looking at the spot ETF prices. I'm watching flows of Ether ETFs in particular. They have been surging. Just take a look at that. On hopes of laxer regulations under Donald Trump's watch, under a new potential SEC chair here. And you're taking a look and you're seeing it's really been the best it's been since these Ether ETFs have launched. And we've seen around the spot Bitcoin ETFs, for example, and a whole ecosystem form around it, options even. But what we're really watching, even above and beyond this, is what this could mean for future altcoins, where issuers file for spot ETFs on those as well.
Well, Cboe just listed the first cash-settled index options related to the spot price of Bitcoin. This week, Bloomberg caught up with Cboe's Robert Hocking, and they discussed the expansion of its crypto offerings as regulators weigh a Solana ETF.
The market is looking to evolve and looking to evolve quickly. And I think that's what makes it exciting for us. We'll continue to engage with our customers and continue to, look for the feedback on where the risk products that people want. And then we'll look to design those products. We have the ETP business, we have our indexing business, we have our options trading business, our underlying business. We're going to continue to use those core strengths to build out this marketplace and give investors access to what they want access to.
Joining us now, James Seyfarth of Bloomberg Intelligence fame. His team says that Solana ETF approvals are a matter of when and not if. And you may remember James and Eric Balchunas have been following very closely the roadmap that brought you to the advent of the spot Bitcoin ETFs. And if you think about Solana, if you think about some of these other altcoins like XRP, for example, I know a lot of investors have been really looking out for that. What type of roadmap are we looking at?
Yeah, it's kind of a bit of deja vu. We used to keep this tracker of like everything that's been filed, what's been filed, when, what are the deadlines, and that died down after we finally got the Ethereum ETFs approvals, and that has all changed over the last couple months. So we have a bunch of issuers filing for Solana and XRP, like you said. They're filing for basket ETFs, so they're going to hold more than just Bitcoin and Ethereum and these other coins. It'll be 10 coins potentially, and we have some filings for just Bitcoin and Ethereum. So they're throwing spaghetti at the wall and seeing what this SEC is going to be ready to do.
Well, so let's talk about this next SEC, because I'm wondering how the narrative shifted, at least in your world, after Trump won last month.
Yeah, I mean, there's no other way of putting it other than that Gensler's SEC was very negative on crypto. They were not accommodative at all. They refused to do rulemaking. So this coming SEC, even if they are, most people are expecting them to be accommodative. They're expecting them to do some sort of clear rulemaking. But even if they don't do that, even if they're less, argumentative with the space, less negative on the space, that would be positive. So I think a lot of issuers are hoping to kind of get these things out the door as quickly as possible and get the ball rolling, but there's no guarantee that these filings that we've seen right now are going to start the ball.
Something you've noted in your analysis is not just what you see from the issuers themselves, but also the exchanges. A lot of these newer filings when it comes to Solana have filed alongside SIBO. Why is that?
Yeah, it's funny. So the three of the filers, Van Eck, 21 Shares, and Canary, they have partnered with SIBO in different ways in the past. Bitwise, specifically for the Solana filing, is interesting to partner with SIBO because all of their other filings in the past have been with the New York Stock Exchange. So that kind of tells me that, one, maybe the New York Stock Exchange isn't willing to push the envelope, and SIBO kind of is. There's no way to know exactly how this is going to tie out. But the way the SEC usually works is once these things filed, all of these issuers filed with SIBO on the 21st of November, and typically within 14 days, usually on the 14th day, the SEC acknowledges it, and that's when the clock really starts. So we have till the end of this week, really, for the SEC to acknowledge these things. Back when Van Eck and 21 Shares filed these a couple months ago, they basically never got acknowledged. SIBO was forced to withdraw. It was almost a pseudo decline. So we could see this SEC decline to even look at these right now because, you know, the SEC's Division of Enforcement is actively calling Solana a security or saying that it went through a securities offering.
All right, we'll see how that changes in the coming months. James, certainly appreciate you joining us as we do always. James Seyfert of Bloomberg Intelligence. Thank you. Well, let's broaden out the conversation. We're going to bring in Tracy Chen, CEO of the cryptocurrency exchange Bitget. Gracie, good to see you this afternoon. I want to start a little bit just big picture and talk price here because in terms of Bitcoin's price, we've actually seen it come within hundreds of dollars of $100,000, but it's kind of been range bound over the last week or so, above $90,000, in recent days around $95,000. What do you see as the path forward?
Okay. We think in the short run, right now the market is actually adjusting to profit taking and reacting to the potential shifts, the political shifts, especially for Donald Trump's re-election, although it's seen crypto friendly, but right now we're getting into the stage before Donald Trump really became the president. So lots of whales are taking profit because they started accumulating Bitcoin at very early stage, maybe right after FTX went down in 2022 of November at about 20K-ish. Myself is probably one of them. I actually accumulated lots of Bitcoins at an early stage. So for me, or for a whale like myself, 100K is a profit-taking stage.
How early were you? Give us an idea. Give some context here.
So I did buy Bitcoin, Ethereum, and XRP in 2015. At that time, Bitcoin was only 300. But the more accumulating stage for me is right after FTX collapse and in early 2023.
What about outside of Bitcoin? You see this renewed interest in the landscape of altcoins, particularly as this idea that the United States will be a lot looser when it comes to regulations around altcoins that they have been so tough on for a lot of exchanges trying to list them. What are you seeing in terms of activity on your platform and the excitement around these altcoins, and is that the only reason?
Yeah, for the altcoins, there are different altcoins, obviously. There are Ethereum, Solana, if they can be considered as altcoins. There are also meme coins. There are also lots of Web3 projects on Layer 2, on DeepIn sectors, which are all providing altcoins. For us, like right now, we do see a lot of trend, like the major cryptocurrencies such as Bitcoin, Ethereum, Solana are becoming bigger. So the big ones become bigger. And of course, in terms of Solana, we do. I was hearing one of your experts mentioning that he thinks Solana ETF's approval is just a matter of time. However, I disagree with that because right now we don't see much so-called traction for Solana's approval in terms of ETF, the same approach. One reason of that is if you look at the historical approval of the spot ETFs, they are first listed on futures ETF, like both Bitcoin and Ethereum. However, we don't see that for Solana and Doge yet. Another thing is, I think your expert also mentioned that like lots of lawsuits, for example, the previous SEC lawsuit against many centralized exchanges, not including us, but some other major ones over there, is actually classifying Solana as a security already. So it's a big hurdle because for Ethereum and Bitcoin, it's more like commodity. The the issue or the risk of market manipulation and very centralized governmental entity over this cryptocurrency is much less in Bitcoin and Ethereum. But for Solana and Doge, maybe Doge is much more influenced by Elon Musk. So issues around that, we think, are hurdles too for the approval of Solana and Doge ETF.
Gracie,
so,
it's interesting. Right. I want to switch gears here for a moment, just for a moment, to talk about the regulatory landscape in the United States. Because if you look to access Bitget, for example, in the United States, you get that disclaimer about how you can't do so as a U.S. customer. When you think about the Trump administration and any potential new regulators, does it start to change the game for international exchanges? Is there a plan to try to move into the United States?
That's a good question. We also keep discussing about that among our internal higher executives. You're right that Donald Trump is much more friendly than the previous administration, especially like the upcoming SEC chairperson. We're optimistic that he or she will at least be more friendly than Gary Gensler towards the crypto industry. For us, it's a very important strategic decision that we want to make sure that we made it right. At this moment, we're still observing. We're waiting for more clearer regulatory framework coming up, more information about who is the next chairperson and what's his or her so-called sentiment towards the industry, especially towards government regulating the centralized exchanges. I think that's very important. By the way, another thing that we are looking at is also institutional clients' investment into crypto space. As we know, like ETF is approved in the US in early 2023, January 2023. But since then, seems that most of those inflows are from retail users,
right,
are from high net worth individuals. But for lots of pension funds, lots of endowment funds, whether they can start to invest in crypto. Also, with I think in 2022 or 20th of December, there's also a discussion among Microsoft in terms of the institutional investment.
Gracie, we have to leave it there. We are so glad to have you join us today. That is Bitget CEO Gracie Chen. Now, coming up, PayPal Senior Vice President of Blockchain and Cryptocurrency is going to talk to us about the company's push into digital assets.
And we have details on how the Trump family is pitching his new crypto firm, World Liberty, to potential investors.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg. More and more traditional financial firms are diving into blockchain technology, and PayPal, for instance, launched its own stablecoin, PayPal USD, on the Ethereum network. We're going to get an update on that project with Jose Fernandez de Ponte. He's the SVP of Blockchain, Crypto, and Digital Currencies at PayPal. And really, this is about the future of money. It's about the future of payments. And you think about stablecoin, and that's a critical part of it. But over the last 5-10 years, it's been difficult to get traditional financial firms to get on board. Right. You're definitely on board now. So how fast does the adoption really go?
So when you think about, and to your point, we are very much in the digital currency space because we're a payments company. We care a lot about the payments use cases. And we think that this is very much the next generation of payment rails that is getting built right now. In terms of adoption, mostly they get used today for crypto trading. So that's predominantly the first use case. Second is probably dollarized savings. People outside of the US who want to keep an asset that is dollar denominated. The third use case, which is the one that we are the most interested in, is payments and commerce. We are very much still paving the road for that. Adoption is good. We keep saying internally that we are 5 years into a 10-year journey. You see more and more use cases. But again, you need to put the bricks on the road. We deployed on Ethereum, we deployed on Solana, we deployed that inside the PayPal and the Venmo wallets. And more you're going to see that happening inside our own payment use cases.
What does this mean for fees? You know, if I'm going to send him some money on, you know, any really major financial network, there's a fee that's taken in between. But if you send money, for example, on Coinbase, right, with USDC, you're paying with a zero fee. here. And I always thought about that as, people go to a place like that to trade, as you say. But if you're paying no fees, if you're transferring money via stablecoin, then doesn't it kind of almost cannibalize your business in some ways? I mean, how do you think about stablecoin PayPal person-to-person payments?
So we own Venmo. When you send money to Tim on Venmo, do you expect to pay any fees? You wouldn't. Stablecoins
depends on how I pay.
Depends on the funding instrument. But the way we think about a stablecoin is very much as your tokenized version of your PayPal balance or your Venmo balance. So when you're buying a stablecoin on PayPal or Venmo today, you don't pay fees. When you're selling it back to dollars to put in your bank account or keep it as balance, you don't pay fees. If you're sending that on chain to someone, you will pay the network fees, Ethereum or Solana fees, but we don't charge any fee on top of that. How
does that network fee compare to a credit card fee?
Well, if you are usually fees around credit cards tend to be 2 to 3%. The Solana network fees tend to be pennies on the dollar. The Ethereum fees, depending on the day, are.
I want to take a step back and just get an idea for the context of how big you are in the space. You've been doing this, at least from the perspective of being able to buy crypto using PayPal and Venmo for more than 4 years at this point. You could buy Bitcoin in 2020 on PayPal. How much Bitcoin have people bought on PayPal? Give us a size. Give us some numbers here.
We file regularly the assets that we hold in custody for our clients as part of our filings. I think it's in the environment of around $2 billion that we hold for our customers today. We have been in the business, as you said, for 4 years now. I think that the latest number that I've heard for crypto users in the US is around 52 million consumers. A significant portion of those do business with us.
Okay, and you say that making payments using these cryptos is sort of the next layer of rails when it comes to the payment system. Can you give us some context as to who is checking out on PayPal actually paying with crypto right now? Like what percentage of transactions is that happening?
We need to separate stablecoins and non-stablecoins.
Right.
We have been supporting crypto as a funding instrument for a long time. We don't see a ton of people who are willing to go and part ways with their Bitcoin or their ETH to buy at a merchant. That's not, people still think more of that as an asset that will hold for appreciation. We see more transaction volume happening on stablecoins, still very, very early games. I don't think that beyond digital goods, B2B commerce, we are seeing a significant adoption of stablecoins for payments yet. Yet.
Like, do you think we will?
Emphasis on yet. Absolutely. As we said, I think that it's going to take a while. If you want to use stablecoins today, if you're in the US and you have a credit card and you're going to go and get some Cyber Monday offers, you don't really have a need for a stablecoin today. I don't think that this is going to be about seeing a stablecoin button at a merchant and going and paying with your stablecoin. If you are outside of the US and you want to buy from a US merchant, I think that's where you're going to see adoption first. If you want to buy digital goods, if you want to buy NFTs, you're going to see that first. We are seeing a ton of traction, though, in the B2B space, because that's a very, very rational conversation to have with a CFO. You say, you're going to use this instrument to pay vendors outside of the US, you're going to save wiring fees, but more important than that, you're going to get 5 days of float, that money is not floating on cyberspace. You're going to get better Forex, you're going to get less counterparty risk.
You know, a lot of people talk about the new wave of regulation when you think about the path forward, the Trump administration, a new SEC chair, but really it's not just the SEC, it's the OCC, it's all the banking regulators. You've seen the venture capital community really in an uproar around just how, I'd like to say careful, but they would say prohibitive around the regulation around financial technology. PayPal is a giant company, but you've seen kind of all ends of this. How much do you think that the reins will really loosen up to really make a new atmosphere for payments and not just buying and selling Bitcoin?
Yeah, so I've been in payments for the best part of the last 20 years and in crypto for the best part of the last 10. And one thing that I've learned is if you're going to work on something that matters, whether it's finance or education or healthcare, more likely than not, it's going to be regulated. And we operate in 200 markets, and we operate with regulators all over the world. And a big part of our launch of stablecoin was about, we wanted to launch in New York, we wanted to go after the highest regulatory standard that there was in the land, and we collaborate with many regulators around the world. I do think that the federal side is going to probably get more clear in the US. We need to remember, when there's a conversation about regulation in the US, at the state level, there has been some fantastic work on clarity that was already underway. New York had very clear rules, places like California, Wyoming, Louisiana. At the state level, there was the clarity was getting there. There was some conflicting signals on the federal side, and hopefully we will get more clarity there.
Jose Fernandez de Ponte, Good to see you. Thanks for
Good to
coming
see
to
you
visit
too.
us in New York. SVP of Blockchain, Crypto, and Digital Currencies over at PayPal. Well, coming up, what we know about World Liberty Financial, which pitches a token that has 75% of proceeds going right to the Trump family. This is Bloomberg. Well, Donald Trump, who called Bitcoin a scam as recently as 2021, has started promoting a project called World Liberty Financial that happened over the summer. We've talked quite a bit about it. Bloomberg's Zeke Fox reports that the Trumps have been pitching its proprietary token. Zeke joins us now to explain their pitch. So I want to talk a little bit about where Justin Sun fits into this. When he's not buying bananas for $6.2 million, what's he doing with crypto?
Yeah, so the Trumps are pitching World Liberty, and it's kind of a weird investment because it's a token that you can't sell. That's part of the terms of it, unless the rules change. And you get no share of the revenue. And 75% of the money you pay goes straight to the Trumps. So they were having a bit of trouble.
Sounds like a timeshare.
Yeah, well, they weren't getting a lot of takers. And then Justin Sun came in the other day. He bought $30 million of World Liberty tokens. This pushed the project over the minimum to trigger a payout to the Trumps. So of that 30 million, they stand to get 15 million or so. I mean, it's pretty wild. This is kind of unprecedented that you have this way to pay the president.
More on Justin Sun, because, of course, he has had his own run-ins with U.S. regulators. Why is he investing in this?
So, I mean, he says he's not looking for any favors or anything like that, but he is fighting a lawsuit by the SEC. They sued him in 2023. He's the founder of Tron, one of the biggest blockchains, and they said that he manipulated the price of the Tron token with fake trades. He's denied this. So he's one of the many crypto guys who are now going to be able to pitch Trump on why they were targeted unfairly, hope for better treatment under the SEC now.
Zeke, just 20 seconds. Potential conflicts of interest as the president-elect takes office January 20th?
I mean, it's pretty wild. Anybody who wants to send money to the Trumps can just go buy this World Liberty token. And Sun, with 30 million, he actually got named an advisor to the project. So he's in business with the Trumps now.
Zeke, thank you so much for your reporting. Of course, you can find this story also in Business Week Daily and on Bloomberg.com. And don't forget to catch Zeke's book, Number Go Up, wherever you can buy books. And that is all for Bloomberg Crypto today. Join us same time, same place next week. This is Bloomberg.